Ladies and gentlemen, good afternoon. Welcome to HansaMatrix Investor Conference webinar about financial results and company's activities in the fourth quarter and 12 months of 2018. Today, we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO of HansaMatrix, Mr.Macijevskis. Before I give the floor to the gentlemen, let me shortly remind you about the agenda of today's webinar. Firstly, we will have the company's presentation, after which we will proceed with a question and answer session. If you have any questions, please use the question box on the right side of your screen. Ilmār, Māri, I invite you to start the presentation.
Hello everybody. It's kind of pleasure to talk to all of you. I see 13 attendees. Thank you for joining seminar. So we are starting Q4 and 12 months result presentation of HansaMatrix company. And presenters will be myself and Mr.Macijevskis, CFO of company. We are starting with brief summary. Business trends, last year 12-month business trends. We have experienced global electronics component, multi-layer ceramic capacitor shortages. It's not yet been resolved. It required certainly on a number of projects. It delayed manufacturing, it delayed supply and then deliveries of products, and required extra management efforts, and of course getting more like these products in required sometimes some extra costs. Another slightly negative trend is, like for negative maybe for employees, but it's very positive for labor market, is that year-to-year salary inflation in 2018 been quite noticeable. Minister of Finance statistics say 8.4%. And despite fact we had kind of made considerations for this in our budgets, it exceeded our plan, so a level of 6%. So it required some labor cost adjustments, and also just for next year, still forecasted a rate of for market expects or forecasted further 7 to 8% inflation, according to bank analyst consensus currently. 2018 Q4 and 12-month summary. Here a brief summary for results, where Q4 we reached turnover by 5.061 million euros. EBITDA stood for 500,000. EBITDA margin was 10.2. Net profit was negative, minus 0.185, and it standed for minus 367. 12-month figures standard for reported 25.15 million turnover with 318 EBITDA level, with EBITDA margin 15.7, net profit 0.872, net profit margin 4.1. Quarter 4 was somehow disappointing in that sense. If you compare figures year to year, then 12-month turnover increased by 7% and EBITDA decreased by 10%. More detail about figures and maybe difficulties and challenges during Q4 will be later in presentation. Still looking into market comparison with peers, still HansaMatrix EBITDA margin highest compared to industry peers. Peer market value range, capitalization values are 4.1 to 9.9, and somehow HansaMatrix still stands for undervaluated level of 3.6, or maybe that's kind of Baltic correction of the capital markets. Bloomberg February 18 to 19. Now we're going to the more detailed results of Q4 and 12 months. So I'll pass floor to Māris, who is continuing with a more detailed review.
Yeah, thank you, Ilmārs. Māris here, CFO of the company. Hello, everyone, and I will start with Q4 results of this year in more detail. So in fourth quarter of 2018, the company reached sales of 5 million, which is a slight 1% decrease as compared to fourth quarter of 2017, and a 1% increase as compared to third or previous quarter of 2018. Next, looking at fourth quarter sales split by region, three main regions to which manufacturing services are provided are Baltic states with 50% of total, Nordic countries 27% of total, and other EU countries 19% of total. Services provided to the companies outside the EU is a small share, or 4% of the total. In fourth quarter, sales to Baltic and outside EU clients increased, but Nordic sales and the rest of EU sales volumes decreased, both as compared to Q4 of 2017 and to the previous quarter, Q3 of 2018. Next, going to sales by market segment. Two main segments are data network products and industrial. This quarter each was 34% of total sales, which are both well-established industries. IoT segment and other segments are comparably smaller, respectively 8% and 24% of total in fourth quarter of 2018. So in this quarter, data network segment and industrial segment decreased, both on year-on-year basis and compared to the previous quarter. IoT and other product segment performed well and increased both on year-on-year basis and also compared to Q3 of 2018. Substantial growth in other segment is explained by growth in production of high-tech optical assemblies and products, as well as by completion and invoicing of several longer period R&D projects. Next, looking at the profitability results of the quarter, as you can see, EBITDA was €500,000, which is 37% down on year-on-year basis and 33% down from third quarter of 2018. This quarter, company operated with net loss of €0.2 million. And profitability was influenced in this quarter by a mix of several factors, which are temporary decreased share of higher margin products this quarter, temporary effect of decreased business due to fire accident in one of the client's warehouses, which was already reported previously, also influenced by labor cost increase by wage corrections introduced in Q4 of 2018, and also by December with quite many holidays at the end of the year. And next, aggregated 12 months results. So if we look at the whole year, then the quarterly fluctuations are smoothed out. And as you can see, for all 12 months periods reported here, the turnover growth is observed in the chart. And in 2018, 21 million turnover was achieved, which demonstrates 7% year-on-year turnover growth, and fulfills previously issued guidance forecasting growth of revenue to reach 20 million by year of 2018. Next, sales split by region in 2018. Baltics 45%, Nordic countries 28%, the rest of EU 26%, and outside EU 2%. With all key regions growing on year-on-year basis, except the outside EU countries. Fastest growth was observed in the rest of EU sales, 17% on year-on-year basis, explained by the increased order flow from existing customers and also obtaining some new clients. Then sales by market segment in 2018, majority of market segments exhibited growth, except data networks, which slightly decreased by 2%. Industrial segment increased by 11%, IoT by 13%, and other by 47% on year-on-year basis. Profitability results, so EBITDA achieved was 3.3 million, which is a 10% decrease on a year-on-year basis. Net profit result was 0.9 million euro, which is down 29% if we compare to the normalized profit of 2017. Normalized meaning that the corporate income tax deferred liability reversal is corrected out of the profit of 2017. So EBITDA margin was 15.7% and net profit margin 4.1%. And regarding profitability, as I already mentioned, it was influenced by several factors, which was decrease of share of higher margin products, fire accident in the client's warehouse, labor cost increase, and December with many holidays. And TTM 12 months results in detail. So turnover achieved 21.2 million. Up by 7%. EBITDA and net profit 3.3 million and 0.9 million. Both have decreased compared to TTM sales result of fourth quarter of 2017. And EBITDA and net profit margins 15.7% and 4.1% respectively. And this is all for my part. I give floor to Ilmārs now to continue the presentation.
Okay, so thank you, Māris. I'm taking over again. I'll go through other activities. Quarterly and 12-month R&D turnover. As you can see from the chart, last quarter we had some higher figures than in average before. It was reported 0.68 million euros, and this corresponds to 13.4% share of quarterly consolidated sales. Reason for having is for 12 months TTM and R&D sales reported 1.5 million, 31% increase compared to 2017, and which makes 7.5% share of total consolidated sales. There are several factors which kind of provided that result. First of all, we have a trend that we started to increase production of optical assemblies and finished products. That increased to 0.34 million euros in Q4. Trend will continue into 2019. That is kind of our first achievement in R&D or more innovative product development and manufacturing. Also part of success is, of course, its completion invoicing on Q4 of several longer period R&D projects that was in development over whole year. So that somehow reflects on last quarter. And investments during 2018 was Like if you're totaling figures, during 12 months last year, we did 2.5 million euro investments in production capacity increase, introduction of new production technologies, 1 million out of 2.5 being invested in Q4 2018. Most significant investments in Q4, we did two new things. That we started to build up our so-called IPC class 3, or it's the highest quality electronic circuit productions quality standards, and equipment to produce those to increase quality and getting ready for new AS 9100 quality certification. That is aviation, aerospace, and similar complexity level of products. Plastic also, we started process of setting up plastic parts production. We received first shipment of equipment to start injection molding production to increase added value and reduce outsourcing quality and logistic costs in part of the plastic body and enclosure parts into electronic products. Investments in associated companies in 2018. Company made 2.7 million euro investments into LightSpace technologies, which Q4 made. The part in Q4 was 1.9. It was financed technology research development and commercialization of 3D display technologies. In 2018, 363,000 euros, and out of them 72,000 in Q4, investments in form of convertible loan to associated companies in Sparks for Riks High-Tech City project development. This is our expected new site near Riga Airport. And as of end of 2018, investment in form of the convertible loan in Sparks totaled to 1.2 million euros. A little bit highlights of the business development of associated companies. Starting with LightSpace Technologies. During reporting period, LightSpace has started feasibility study with leading car manufacturer of development of car multiplying 3D augmented reality head-up display. And actually, we are already having a second automotive customer joining this phase of R&D. During 12 months, LightSpace has filed 8 new patent applications and published 2 scientific articles. And marketing activities include many marketing events, including SPI Photonics West 2018 in San Francisco, SPI DCS 2018 in Orlando, Florida, USA, and 2 conferences, ISRC2 in Rome and Alexandria. So, and there were some activities in January that you can read after the reporting period. You can read in our larger report. Investments in High-Tech City project, Riga Airport. We continued to complete to finalize construction technical project. It's right now going to phase of doing expert reviews, and currently searching for real estate investor support realization of the project High-Tech City. That's about particular investment. Other events during reporting period. First of all, we reported already during period that we signed large contract to supply high complexity electronic assemblies in amount of $3 million or period 2019 to 2020. Shipments would start probably second half of this year to industrial sales corporate customers in location outside the EU. Also, we paid out second installment of 2017 profit dividend payment in amount of 73,000 euros. Additionally to this, we have signed long-term financing agreement with European Investment Bank in amount of up to 10 million euros in support of planned investments, which would total 20 million in years 2018 to 2020, and received first tranche of 5 million euros. Company issued HansaMatrix stock warrants to AB in 10% of company stock on fully diluted basis. We signed new financing agreement with commercial bank SEB regarding factoring facility, 2.7 million euros, and working capital financing maturity prolongation for another year in amount of 1.9 million. Also, bank approved our long-term financing limit for investments at a level of 2.5 million euros. That kind of completes most important events. And this is kind of I complete our presentation. Here we are having several number of questions been submitted before. On those we have prepared several slides. So we will, after making small break, we will continue with this. So Maya, maybe you.
Thank you, Ilmār, and thank you, Māri, for this presentation. We have received also a couple of questions here in the questions window. Let's start with the questions in the order they have been received. But before, just a reminder to those who haven't yet submitted their questions, you can still do that. So please use the questions section in the settings panel zone. Ilmār, let's start with the previously received questions.
Yeah, I'm continuing question answer session. We received quite a number of questions for obvious reasons, and I'm going through them. First question was submitted before a webinar. How would you describe the current situation in terms of the shortage of components, especially MLCC'S? When do you expect component deficit to ease and prices to normalize? Deficit, unfortunately, it's not over. I originally thought when it started that it should be over within like 12 months. It's not yet. So deficit expected to continue, at least how it looks currently in 2019. Industry somehow has accepted slightly higher prices and longer lead times and can adapt it to that situation. HansaMatrix believes that situation will even out later this year, because in historically looking into similar cases, they're never longer than a year. So it might be that maybe new situation here is a little bit longer than that, but the supply chain has quite flexibility to react on this. Second question, do you expect EBITDA margin to improve anytime soon, or similar margin to Q4 can stay longer? Let's say Q4 was not really representable in a form that we had several temporary problems that we had to solve during Q4, which affected really result. So basically, we expect that the margins will improve in Q1, Q2. We still have a longer term downward pressure on margins, which are coming from wage inflation and component deficit. Basically, component deficit will be corrected out of our margins, but wage inflation, unfortunately, have to start to plan for slightly higher levels than we originally thought, like a couple years ago. And of course, we need to consider some cost increase labor part, and of course have to look for our production activity increase measures how they can term to kind of react to that. In medium, as I say, medium term forecasted EBITDA margins, as we previously issued in guidance, would stay at 12 to 15%. We are not excluding periods that they can still happen with higher peaks according to market situation on or realization of certain projects, customer projects. Question number 3, please name a few of your current largest customers by sales in data networks industrial segments. Here we again, I have to a little bit say sorry that we cannot do this and I cannot provide this. We had most of customers we are having confidentiality agreements regarding disclosures of their names and who identities. So still customers are free to acknowledge cooperation with us if they feel so. So if you see names, company OEMs that acknowledge cooperation with us, that's where you can find those facts, but we cannot take here active role. Question number 4. When could we expect larger deliveries to the new customer outside the EU to appear in sales figures? The customer we mentioned in our marketing news release later last year. Deliveries are expected to start with the mid of the year, so probably in the figures we'll see them in Q3, Q4. But we are having what we are seeing is increase of shipments outside the EU already starting with Q4 with several other customers that we are having in United States and other regions. Question number 5. What part of Q4 R&D revenues was related to LightSpace activities? As we already stated, the LightSpace Technologies company have close cooperation with HansaMatrix Innovation Research and Development team and uses its services to quite large extent. But having a precise answer on precise question, that LightSpace activities, if you take Q4, that LightSpace activity used 43% of R&D revenues for project development works like R&D work. 90% of R&D revenues was attributed to optical device manufacturing, which actually represented actually making LightSpace products by HansaMatrix Innovation. So these two elements, if you total them, then 62% would be the Q4 R&D revenue related to LightSpace activities. Please describe the major terms of convertible loans given to LightSpace, period, interest rates, conversion terms, etc. What would be the ownership of HansaMatrix LightSpace, assuming all loans will be converted? Basically, the convertible loans has 0 interest rate, and it is convertible at the same rate, 483 euros, as stated before for investments, latest investments. For half of first 50% of announced value amount and 50% higher valuation for the second half of a loan. So that's about the main terms. Please explain why LightSpace accounts the convertible loans under other reserves within the equity. Answer is that will be accounted in liabilities category. There is this will be corrected in audited accounts. Number 8, a little accounting aspect, given that HansaMatrix accounts LightSpace as an associated company under the equity method, why the respective position is not adjusted in Hansa's balance sheet. These are operative accounts, therefore the deduction of associated company loss was carried out in the balance sheet item other investment loans. In audited accounts, the respective changes will be included in investment in associates balance sheet item. Number 9, when do you expect LightSpace to reach a break-even level? Our expectations is that such can happen in around years 2021. Of course, it depends on many factors, how quickly market or basically our internal homework, how quickly we make our homework happen, and also how the market would react to what we're offering now. We still have 2, sorry, I thought that's the last one. 2 more questions here. Can you reveal the annual interest rate that will be accumulated for European Investment Bank loan in 2019? And when HansaMatrix could receive following tranches of the EIB facility? The effective annual rate to be accumulated will depend on warrant value in 5 years. That is being discussed and confirmed with our others. We currently are discussing really the method and right fair value accounting for this warrant, and will come. You'll probably see that once we publish the audited results, what's the final judgment for this. So we cannot reveal more detail at this point. The following European Investment Bank financing tranches could be received after the first part of the investment program in amount of 10 million euros is finalized and certain financial milestones are reached. So probably sometime maybe middle of this year we would accomplish this investment plan, and hopefully financial milestones also will be reached. So quite soon, but of course we need to do our homework. And final question, in 2070 you expected HansaMatrix sales to reach euro 30 million by 2020 with EBITDA margin 12 to 15%. Are those still realistic or a new guidance will be released? According to our business forecasts that we discussed with customers, we continue to confirm previously issued guidance to reach 30 million euro sales by 2020 with EBITDA margin 12 to 15%. At this point, we have full ground to full kind of we are fully confident that this still stands. So I think that completes our previously submitted questions. So we can proceed with the questions being submitted during webinar.
Thank you, Ilmār, for the answers you've provided. Now let's proceed with the questions we received during the webinar. And the first question is, are there any plans for the new shareholders coming to HansaMatrix? When and for what price? Ilmār?
Yes. Yeah, we've been. I've been actually asked by several potential investors to kind of. Also, they suggested they would be interested to invest, and we had discussions. I cannot, of course, answer this. Once it happens, then we know what is the shareholders, what is the price they get shares. But yes, I can confirm we have interest for very interesting investors, both financial and also strategic. And that's probably the answer I think I give you at the moment.
Thank you, Ilmār. So let's proceed with the second question. Which are the two most important markets within rest of EU in respect of turnover? Ilmār?
Yes, I would say for one, let's say if I say one most important outside the EU, that would be US market currently. But then we are seeing like I cannot name second most important. We've been receiving basically we're delivering products to India, we are delivering products to Taiwan, we are delivering products to kind of countries like Argentina. But these are due to fact that existing customers expand the geography of the business. So we don't know maybe how develop those countries, those projects, and some of them are one-off projects like tenders for equipping electric grids in Latin America and some others. But if you're talking like more selling to professional markets, regular business, then I would say I can name first most important, that's United States.
Okay.
I think I answered this, yeah.
Okay, thank you. So let's proceed with the next question. Discarding the bad 2018 fourth quarter, does previous guidance of EBITDA margin range and target turnover still stands? Ilmār?
Yes, I think I had it already on a submitted question. The answer is yes. We still confirm previously issued guidance. I can read it one more time down. It's to reach 30 million euro sales by 2020, and with EBITDA margin in the range 12 to 15%. Yeah, this stand, and we feel quite confident about that.
Okay. The following question. What are the main challenges you face growing sales outside the Baltic countries?
Yeah, thank you. Really, there's no any specific challenges. I think the market, contract manufacturing market, which is part of our business, and R&D, new product development market, that is also another important part in our business. I would say sometimes we are having a little bit of we have to overcome the stereotype that a company from this region can only be dumb contract manufacturer. That we are overcoming very easy when a customer visits us and see technical level of our manufacturing processes or abilities, that products and what we can design and what competencies do we have. Of course, the stereotype disappears, but of course, and sometimes you have to have wrong stereotypes in place for companies from maybe like Europe or this region. But that's the probably main challenge that we have to solve here. But it's actually, we are of course references to customers, to other potential customers here actually help to break the ice and also give very good introduction. So keeping happy existing customers of course gives you new business. That's kind of how we do it.
Thank you.
Yeah.
Next question. Are you considering a separate stock exchange listing for LightSpace technologies?
Okay, thank you. Interesting question. Probably not immediately. We are of course considering going further. The technology that we are in might require additional funding for doing certain technological developments. I think like do separate listing. It might come to the table maybe in maybe 2-3 year time, but we still have one round of development or one kind of one step before we could do that. We would rather see scenarios that this technology is it more maybe held by like VC or private equity investor holding, and if you are more technology company and big part of business is licensing, it might probably better it's part of some strategic ownership consortium or something. We don't exclude such scenario, but I don't think that's the main one currently.
Thank you, Ilmārs.
Yeah.
And the next question we have received. In second quarter 2018, R&D sales formed highest ever portion of quarterly sales, but overall EBITDA margin was still rather low. How R&D margin compares with your core production activities? And do you offer LightSpace some discounted prices?
Yeah, a very good question. Even having figure ever like highest ever, I still believe that we need to R&D sales has to stand at least for 10% of turnover. That's our target. And being a level of 13, it's I would say a very healthy level. Despite the fact that it was some projects was invoiced end of year, you will see the trend, and it's already starting up that we, on top of having R&D projects, we are starting to manufacture some devices or some systems in very high-tech areas in photonics, and trend is that our photonics business is growing, and you will see more confirmation in that through the year 2019. We already have bookings and orders on continuing of this trend. So R&D margins for those products are higher than our core production activities generally. Of course, you have to exclude the two elements. If you are selling just in R&D, you can sell hours, engineer hours, you can do professional hours. You can sell certain projects. You can sell production which is based on those projects. You can license things. So generally, it's combination of all. We expect the margins in R&D part will be substantially higher than in core business. You, however, have to understand that even it's growing. That year 2018 was the first we started to have it really comparable to some period before. We will put more attention of more detailed reporting starting with year 2019 first quarter to kind of to show more analytical data on R&D jobs. What relates LightSpace cooperation? Yes, we do offer some discounts. However, we of course have market pricing requirements from like transfer pricing point of view. But these are comparable discounts we would offer to any long-term regular cooperation partner with such trust in us and in like meaning from HansaMatrix point of view and using our services. Pricing is very similar that would be given to we have medical customer in R&D customer in Germany, and pricing is comparable. It's the kind of we are not giving up here. I would say the question is that do we sacrifice margins just to support LightSpace? I think it's fairly discussed with all shareholders in LightSpace and HansaMatrix. It complies with the transfer pricing, and it gives profits, reasonable profits to HansaMatrix Innovation doing this. If I can answer this.
Thank you, Ilmār.
Yeah.
Do you have anything else to add?
You mean like from answers? I think I had quite a number of answers here given. Yeah, yeah. Maybe as I say, this has been quite many questions about this R&D. If I just a little bit summarize here, that you will see R&D margins, R&D sales margin growing. You will see amounts growing, and those are come from new areas for HansaMatrix, which is not regular. Basically, if you define the manufacturing, core manufacturing as a more contract or ODM manufacturing part, and everything which comes out of R&D is on top of that. It's either higher complexity or some new area like photonics added to the electronic parts, or we do just photonics assembling. So these are new areas for company, and while they are new, we will keep them in separate portfolio. If they become more regular thing, and with the time, certainly it might create new division within a company like optical products. But let's see how it develops. If we reach that could be in 1-2 year time. We might have optical division coming out of this. So we have, I would say, R&D gives us not just R&D revenue, which just gives us big synergy and big potential to grow. I think that's how we could summarize that. So thank you then for questions, if it's last one.
Yes, thank you, Ilmār. All questions are answered. And now I would like to remind you that recording of the webinar will be available in the Nasdaq Baltic YouTube channel and in the company's announcement. Ilmār, Māri, thank you for this presentation and all the answers you provided. Participants, thank you for joining.
Yeah, thank you for joining this and listening to us.
Thank you. Now we are ending the webinar.